Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersecci, and these are the stories that set your agenda. Defiant in defeat, Japan's prime minister vows to stay on after his ruling coalition loses its upper house majority, the first time it's failed to control either house since 1955. The yen gains after 2 weeks of losses. Fighting back, EU envoys are set to meet as early as this week to prepare a tariff retaliation plan as the U.S. continues to harden its stance. Plus, a big week for European earnings with some of the region's biggest banks set to report. But first, Ryanair results crossing the terminal. Okay, so welcome to the beginning of the week, everybody. We are just getting some earnings come through from Ryanair right at the top of the show. Let me bring you some of the highlights. First quarter profit after tax coming in at 822 million euros. The estimate was 687.6 million. So a beat there. As far as customers, full year customers coming in at 206 million. The estimate was 206.43. So in line as well. Other commentary, we are yet to get the first quarter revenue that has also come through, 4.34 billion euros. Again, it beats also on top line versus the estimates of 4.23. So we are getting a beat both on the bottom line and on the top line as well. Q1 customers, 57.9 million versus estimates of 58 million. So in line with estimates, the load factor coming in at 94% versus the estimates of 93.2%. So we are going to be speaking to the CFO shortly, but on first glance, a beat both on top and bottom line from Ryanair. Okay, let's broaden it out and take a look at how other markets are faring. At the beginning of earnings week, as we just spoke about with the airlines earnings later this week in Europe, a bunch of European banks will be reporting as well, in addition to the ECB meeting. So European markets today squaring up, leaning towards a negative open, down 0.2%. And keep an eye as well on those tariff discussions as we get towards the August 1st deadline and how the EU may respond or prepare a list of countermeasures. FTSE 100 trading basically flattish, slightly towards the red. But Wall Street indices pointed to open up in the green, up about 15 basis points, 20 basis points respectively. Another big week for earnings from the tech side of things with the names like Amazon, Meta, Apple all reporting this week as well. Flipping over, let's take a look at cross assets. There's one currency pair that's been on everyone's mind this morning, and that is dollar yen after the results of the upper house elections in Japan, showing that LDP lost a majority. So this is the reaction. The yen is strengthening versus the USD. We'll talk more about that on the show as we speak about yen weakness in the run-up to this election. Euro, as you can see, also trading sideways today. 116.30 is where we're at. ECB going to be the focus. No rate cut expected, but of course, the language, any commentary around the economy will be parsed for further details on interest rate clues. Brent sitting at around $69 here, slightly firmer, and then gold also a tad firmer as well, up 0.3%. Okay, let's see how Asian markets are faring with Avril Hong in Singapore. Avril, I'm sure Japan on everyone's mind, but of course it's a national holiday in Japan today.
Yeah, so you have stock and bond markets there shut. We are seeing Asia stocks pretty range-bound, edging a bit higher in China, but the spotlight, as you say, is on Japan. But somehow we've come away from election weekend with still this lingering political and trade talk uncertainty. So futures are pairing the declines from earlier on. Nikkei sitting quite flat now. The market there is one that has been struggling for momentum for much of this month. That's worth noting. And there are some that also point out that domestic-related stocks, domestic-oriented stocks could see support if the opposition lawmakers' calls for tax cuts gain further traction. Now, aside from that, let's take a look at the Japanese currency as well. Today, edging higher, hitting as high as 147.8 against the greenback. But of course, this is after a couple of weeks of moving lower. Is the concern about more government spending or tax cuts to come. And add to that how overall there's a bearish view that's emerged on the Japanese currency. So whatever gains you're seeing for now might be quite short-lived, especially given how the election result might just mean that it's even trickier for the BOJ to give any sort of timeline for the next rate hike. Joanna.
Okay, thank you so much, Avril, for the latest there. And speaking of Japan, we're just getting some lines coming through from the Prime Minister. Remember, there's a lot of pressure on Ishiba after the defeat over the weekend, questions about whether he's going to stay on in the job. But he's speaking now, and he's talking about the upper house election results, saying he apologizes deeply for the results. Japan still faces difficulties like trade talks. These are live pictures of him speaking after these election results were a disappointment for LDP. He's speaking in Japanese, so just to bring you some of the loose translations here, Ishiba is saying they must not allow for stagnation in domestic politics, must still fulfill duty as the biggest party in the parliament. And he's referring, of course, to LDP and the fact that even though they faced a defeat the past weekend, they still constitute the biggest party in parliament, which, of course, gives him the mandate to stay on as prime minister. He's confirming that the coalition with Komeito is set to continue. They will look to seek common ground with parties other than Komeito. And of course, that is significant as well, because now they no longer have a commanding majority. They will need to shore up support from other parties within parliament. So this is perhaps looking to extend an olive branch. And then Ishiba is also talking about the trade talks with the U.S., and that's a big focus for countries all around the world, not just Japan, as we get closer and closer to the August 1 tariff deadline. Ishiba is saying we must protect Japan's interest in the trade talks with the U.S. And then he adds he is hoping to speak with Trump directly soon. So let's see if that phone call between the two leaders actually does transpire. And you've got to think also from President Trump's perspective, he has many people around the world that are wanting to reach out to him before the August 1 deadline. But this is the Japanese Prime Minister delivering remarks now after that quite substantial defeat for the leading party, LDP, in the upper house elections. And he is apologizing. So some quite big takeaways there. And with that, let's maybe just recap some of the headlines from the weekend and the fact that Ishiba did actually vow to stay on. Let's get more from Bloomberg's Alice French in Tokyo. Bringing in some of these lines here, I would say that the main thing that stood out to me is the fact that he's apologized for these election results, but is going to stay on and has talked about maybe reaching out to other parties to seek common ground, is the language that he was talking about. What does that necessarily mean for fiscal policy?
Yeah, so I mean, look, I think this outcome really was expected by a lot of market players this morning. It wasn't looking good for Ishiba or the LDP going into this election. And like you say, fiscal policy has been a massive focus. We saw JGB yields up at historic highs last week on worries that, if the LDP and Ishiba is weakened, as it has been, that there might be more government spending. We know that multiple opposition parties are pushing for consumption tax cuts, which obviously raises concerns about how those are going to be funded. Government bonds had already been in the focus because we know that the BOJ is scaling back its purchases. So I think really how Ishiba moves forward with those fiscal policies is going to be a huge focus of the market going forwards. And it'll be interesting to see how the opposition kind of organizes itself going forwards and which parties we see coming to the fore and which policies Ishiba ends up having to make concessions to just in order to keep his job.
Yeah. What does it mean for Bank of Japan monetary policy? We speak about the backdrop of the weakening yen, but the expectation was that the Bank of Japan would have to continue with the hiking cycle. Might the political backdrop influence the Bank of Japan in the coming months?
I think so, yeah. I mean, the general consensus is that the BOJ doesn't really have many options apart from to push forward with its rate hikes. But having said that, now that we have this sort of political instability, it's been many decades, really, since Japan has seen such weak government leadership that, yeah, the BOJ may have to put the brakes on some of those future rate hikes. Some people I've been speaking to this morning saying that they had been expecting at least one rate hike by the end of 2025. Now it's looking like there might be none. If down the line Ishiba Ishiba does end up having to, step down as Prime Minister, one of the most popular alternatives to him, Sanae Takaichi, is quite anti-BOJ rate hikes. She's quite into the easing policy. And so, I would say the outlook for those rate hikes has really got a lot more shaky. And of course, that's going to impact the yen. That's going to impact government bonds. It's also going to have knock-on effects for stocks too. So the outlook is definitely looking shakier than it was before.
Yeah, even though today the yen is recuperating just a little bit of the losses versus the USD, still on track for a lot weaker yen versus the dollar over the last couple of weeks. Bloomberg's Japan stocks reporter Alice French, thank you so much. Well, at the top of this show, we broke the Ryanair earnings. Just as a recap, we got a beat on the Q1 profit after tax, 820 million versus estimates of 687.6 million. Also on revenue, a top-line beat. First quarter revenue, 4.34 billion euros versus estimates of 4.2 billion. I'm really happy to say that Ryanair's CFO, Neil Sorahan, joins us now. Neil, talk us through the Q1 earnings. The results seem to be quite solid, both on top and bottom line. What drove the performance?
Yeah, Joanna, nice to talk to you. Yeah, a solid set of results and pleased to be here to deliver them this morning. Traffic, as expected, was just under 68 million passengers, so that was a 4% increase. We saw a fair recovery into the quarter. We had the benefit of a double Easter, insofar as we'd both halves of Easter in April of this year. We'd only half of it in the prior year. And then we'd weak prior year comps with the OTA dispute last year, which is now resolved. Close-in bookings into May and June were a little bit better than we would have expected. So fares were up 21% in the first quarter of the year. I'm very pleased as CFO with the performance on costs, where we saw our unit costs increase by just 1% on a per passenger basis, or up 5% in an absolute basis. And this was down to our strong fuel hedging, offsetting very high increases in our traffic control charges, despite the fact that the service there is lousy and increasing environmental costs. So it was really a combination of modest growth, fair recovery, and strong cost control in the business.
Yeah, nice overview. I want to bring up something that you did mention now, the air traffic control. EasyJet last week recorded a £15 million hit on back of the air traffic control issues, the disruption that took place there. How much of a hit did Ryanair take, and how much progress have you made in terms of sorting out the issues, the long-standing issues on ATC?
Well, we've been trying to sort out those long-standing issues for many, many years, and unfortunately looks like we'll be doing it for a bit more to come. We yet again have called on Ursula von der Leyen, or as we've now rechristened her, Ursula von der Leyen, for all of these issues that we're having. I mean, French ATC now account for over 40% of disruptions in Europe. We would have cancelled over 500 flights over a couple of days in early July. We had another 30,000 passengers disrupted last week as a result of ATC issues across Europe, but primarily in France, where they unfortunately don't protect the overflights. So even though you're not landing in and out of France, you're disrupted because the airspace above France is taken out of commission by the air traffic controllers. So this has a massive impact on the travelling public. We lost about 100,000 passengers as a result of that, and we'll continue to campaign hard. You saw in the first quarter 16% increase in air traffic control charges, yet the service couldn't be worse.
Yeah, well, let me ask you about looking ahead as summer demand. How are things looking at this point? How are you expecting the summer to play out?
Yeah, demand is strong. People are very keen to get out and about and travel. We've 2,600 different routes across the network, including 160 new routes this summer. All of those are booking very strongly. Fares are recovering nicely. We would expect to recover almost all of the 7% fare decline that we had in the second quarter last year. So, you know, we're seeing no softness in people who want to travel. We have limited growth this year. We're only growing by 3% to 206 million passengers, but demand is exceptionally high, and we've no qualms about hitting that target this year. Airports very keen to get Ryanair growth, so you know we're accommodating regions and airports where they're pulling back on municipal aviation taxes, where they're stimulating growth and customers travelling in big numbers.
Yeah. How closely are you watching what happens with the tariff discussions? EU this week reportedly planning on putting together a list of retaliatory tariffs. Boeing aircraft could be included in that. How would it affect your business? And have you done any scenario planning?
Yeah, it's all very hypothetical at the moment, and we all hope that we will see the 1979 civil aviation exemption from tariffs, which has been in place for a very good reason, and that it's very difficult to put tariffs on the various parts that come from all over the world to assemble an aircraft and parts. We took some confidence and comfort from Transport Secretary Duffy's comments when he was at the Paris Air Show that he would like to stick with something like the 1979 exemption. We're all working towards remaining as is. Nobody knows what's going to happen really this side of the 1st of August. Will there be a deal done? I don't know. I hope so. If there isn't, will Europe retaliate? They probably will. Will aircraft be in there? I don't know. But we're very clear. We have a fixed price with Boeing. We expect them to deliver the aircraft at that fixed price. If there are tariffs, it'll be on Boeing's account, not Ryanair's, although we'll work very much with them to help them mitigate the impact of that. But we remain hopeful that sense of prevail and the 1979 civil aviation exemption for aircraft, parts, simulators, engines, etc. will continue to remain in place.
Yeah, I also just want to refer you back to some of the comments the CEO made back in May, which is if these tariffs do come to pass, then you'd have to reevaluate some of your orders and perhaps think of sourcing aircraft from other suppliers, maybe even Chinese suppliers. Is that still on the table?
I've met those Chinese suppliers a couple of times. We've relationships with them. We've relationships with Airbus. The reality is that the Airbus suppliers, Boeing, Airbus, Comac, all of their order books are full this side of the middle of the 2030s. So the difficulty in getting aircraft in the short term is very high. We do have an order book with Boeing. They are performing very well. Their production is ahead. So we would be hopeful that, sense prevails, as I said, the tariffs don't come to pass. We don't need the 29 remaining aircraft in our order book until the summer of next year. So, if there is an issue, we may end up not taking those aircraft for a period of time, until things settle down. But as I said, we expect Boeing to step up to the plate to the extent that there are tariffs, and we will work with them to mitigate the cost to them as best we can.
Neil, great to have you on. Thank you so much for joining Daybreak today. Neil Sorahan, CFO of Ryanair. Appreciate it. All right, coming up, European Union trade envoys are set to meet to formulate a response to a possible no deal with the United States. We'll have more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. European Union envoys are set to meet to formulate a plan for measures to respond to a possible no-deal scenario with U.S. President Donald Trump. The U.S. is now seen to want a near universal tariff on EU goods higher than 10%. But U.S. Commerce Secretary Howard Lutnick says he believes a deal with Europe is within reach.
I am confident we'll get a deal done, okay? And it will be great for America because the president has the back of America. So I think all these key countries will figure out it is better to open their markets to the United States of America than to pay a significant tariff.
Okay, let's bring in Bloomberg senior editor Boaz Pence. So Howard Lutnick sounds optimistic about the possibility of reaching a deal, but of course the EU are planning to retaliate somehow. Do we know what the EU are thinking? What's on the list of potential countermeasures?
Well, to be clear, we are talking about contingencies here, and our reporting shows that the EU is still very much focused on trying to hammer out a deal with the ongoing talks with almost 2 weeks still left to go. At the same time, we are hearing that they see a stiffening in the U.S. position, so they are preparing some potential responses to those steps. the first step would be an already approved package of that would cover about $21 billion worth of American products. And these are very strategic, very much aimed at political pain points in the U.S. system. So these would target things like soybeans from Louisiana, Speaker Mike Johnson's home state, poultry, motorcycles. Then there's a next list that we know the EU has drawn up already. This would cover Boeing planes, as we have heard in the previous segment, US-made cars. This would cover bourbon whiskey as well. And then we are hearing that there's a group of countries that's already pushing for preparing a potential next step, pushing everything to a higher level. And this would encompass things like new taxes on U.S. tech giants, or potentially restricting U.S. investments or barring U.S. firms from participating in European procurement projects. So that's kind of the highest level of the potential responses.
Yeah, digital services, definitely the most onerous one if they go down that route. But Trump and Xi tipped to meet ahead of or during the APEC summit. What do we know about that? That would be a major meeting.
Yes, that certainly sounds like that relationship is going a different way from the U.S.-EU relationship. Just think back a few months ago, it seemed like that relationship was completely broken. They were trading all sorts of missives, verbal threats against each other. And now, last month, President Xi invited President Trump to visit China. We know that Trump has been seeking this meeting all year. So it now looks like there might be a window of opportunity early this fall. There's an APEC summit in Korea in late October, early November. And what we're hearing is that there's some movement in potentially pulling together a meeting of the two heads of state just before that. And they have plenty to talk about, of course, from trade to the status of Taiwan to tech transfers. There's certainly, that would be a huge high point of the diplomatic agenda of this year.
Yeah, let's see if it does happen. If it does, it would be around October. Bloomberg senior editor Balazs Pence, thank you so much for the overview. And coming up, Russia launches a massive air attack on Ukraine just hours after President Zelensky proposed talks with Moscow. More details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories making news. The Washington Post is reporting that a Chinese-American employee of the U.S. Commerce Department has been banned from leaving China since April. According to the South China Morning Post, he traveled there to visit family and was detained when he arrived in the city of Chengdu. Ukraine says Russia has launched a massive air attack using missiles and drones. Ukrainian air defense officials say explosions have been heard across the country, including in western regions and the capital, Kyiv. Earlier, President Volodymyr Zelensky said his government had proposed a meeting with Russia this week, more than a month after the previous round of direct talks. Britain and Germany are set to pledge new air defense systems for Ukraine as the UK government pushes for a 50-day drive to arm Kyiv and bring Russian President Vladimir Putin back to the negotiating table. The UK Defense Secretary will make the announcement later today when he chairs a virtual meeting of the Ukraine Defense Contact Group along with his German counterpart. And coming up, dozens of major German companies set to pledge billions of euros of investment. We'll have the details next as Europe's biggest economy looks for growth. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Giovanna Versace, and these are the stories that set your agenda. Defiant in defeat, Japan's prime minister vows to stay on after his ruling coalition loses its upper house majority, the first time it's failed to control either house since 1955. The end games after 2 weeks of losses. Fighting back, EU envoys are set to meet as early as this week to prepare a tariff retaliation plan as the U.S. continues to harden its stance. Plus, bringing into summer, Ryanair CFO tells us bookings are very strong for the holiday months after Europe's biggest budget airline reports a doubling of net income in the first quarter. And a check on some of the key markets this morning as we talk about Wall Street pulling back from those record highs on Thursday, a bit of a dip on Friday. That being said, very close to those all-time record highs for the S&P and the Nasdaq heading into another big week as far as earnings are concerned. On the tech side of things, Alphabet, Tesla, IBM, some of the names to watch out for. And in Europe, too, European markets leaning towards the red. You can see down 0.3%. We have earnings season beginning to really get ramped up this week. European bank earnings later on during the week, alongside that ECB meeting on Thursday. We'll talk about that shortly. But bottom line is a mixed picture this morning for equity futures. Switching over, let's just take a quick look at dollar yen before we talk in more detail about some of the latest that's coming through, especially with the Japanese Prime Minister Ishiba speaking now as we were running at the top of the show. But yen continues to strengthen versus the USD 0.3% firmer, despite the fact that the ruling party lost the majority in the upper house. Euro trading sideways. We've got Brent slightly firmer this morning, up around 0.4%, $69.50, and then gold 0.5% firmer too. Okay, let's talk more about one of the top macro stories over the weekend, and that is Japan and those upper house elections, bringing in Bloomberg's Valerie Teitel. I was just talking about the reaction in the end. Of course, it is a national holiday in Japan, so the Nikkei is not open for trades. So perhaps it is early days to glean how investors are digesting this. But is it fair to say, Val, that what we got was in line with what market participants were expecting?
Look, if you look at how the yen is trading, I think the markets potentially were bracing for something much worse out of these elections of the upper house in Japan that took place on Sunday. The yen possibly trading higher on some sort of relief, perhaps. But we will have to wait until the markets open tomorrow. We are seeing Nikkei futures, at least, trading around unchanged, and JGB futures, so Japanese government bond futures, yields are around 2 basis points higher. So still a muted reaction, at least to these upper house election results. But what it means for the wider markets, Jumana, is we are now faced with one of the weakest Japanese governments in decades. They also lost the lower house back in October. So this is a fairly weakened coalition led by PM Ishiba. And this could potentially throw a bit of a hammer into the works when it comes to these trade talks with the U.S. We know that these are ongoing, and there's a big risk to the Japanese economy, especially around these looming auto tariffs that they're hoping to find reprieve from. But to that extent, the PM Ishiba has vowed not to step down. He's saying he must fulfill his duty as the biggest party in parliament, and they must protect Japan's interest with the trade talks with the U.S. And he hopes to speak to Trump directly sometime soon. But the big risk on markets' mind is the fact that the last 3 LDP prime ministers, when they lost the upper house majority, they did step down within 2 months. So that'll be a risk on the market's mind, whether we do see some increased instability when it comes to the Japanese government.
Yeah, as we get towards that August 1st deadline as well, so many countries and trading blocs around the world trying to secure deals. Obviously, Europe being one of those blocs, as we talk about them preparing a list of countermeasures. ECB coming up this Thursday. How are they going to be thinking about the potentially growth hits that you could get should those tariffs go ahead and should there be no deal?
Well, it's interesting you bring that up, Jumana, because that is the one new factor between when the ECB previously met versus now, is we now have this renowned threat of 30% tariffs on the European economy from President Donald Trump. And the market will be watching out for Lagarde's comments on growth. She had previously warned back in June that the risks were tilted to the downside when it comes to economic growth within the Eurozone. Markets will be watching for any change of language around the growth outlook. But you are right in terms of the market does not expect much movement on the rate path at the moment. Most economists surveyed by Bloomberg expect the ECB to maintain rates on hold at Thursday's meeting. It'll all be about the subtle differences in languages between this statement and this press conference versus in July. Maybe they want to keep that door open to a possible rate cut in September, but the ECB does go on an extended holiday break. There's now 7 weeks in between this decision on Thursday versus their meeting in December. So that long extended holiday break might bring them some more clarity when it comes to trade policy and perhaps some more clarity on the rate path with it.
Val, always good to chat to you. Thank you so much. Bloomberg's Valerie Teitel. Well, dozens of German companies are expected to pledge to invest hundreds of billions of euros as the government seeks to revive the economy. The CEOs of companies including Siemens and Deutsche Bank are due to meet the Chancellor and Finance Minister at the Chancellery today. Let's get more from Bloomberg's Oliver Crook in Berlin. So talk us through this conference and also the types of pledges and investment pledges that some of these really large blue chip German companies are pre-announcing or the market is expecting out of them.
Yeah, Jumana, this is really sort of the era of corporate investment pledges. It's not quite the 17 trillion that Trump says have been pledged to the United States, but they're expecting to pledge something upwards of 600 billion euros worth of investment over the next few years within the German economy. And this is all part of Friedrich Merz's pitch to really turn the economy around with the help not only of that private investment, but of that public investment, of that upwards potentially of €1 trillion worth of debt finance spending that this government is willing to put forward after having amended the constitutional German debt break at the very beginning of his tenure, and that is really to try to bring this economy into the 21st century after, an economy that has really been built on heavy industry and really increasing wealth through trade. That is now obviously under threat from years of stagnation, but also the trade war that is currently going on with the United States. So these companies have sort of come together for this plan of Made in Germany. This is really the brainchild of the CEOs of both Siemens and Deutsche Bank, and we're very pleased to be joined by them in about an hour's time here in studio, just minutes before their meeting with the Chancellor, because there are a ton of questions to answer. It's not just about what these investments are. It's really a broader question about what this economy looks like going forward. In an optimistic scenario, what does a rewired German economy look like 5 to 10 years from now? That's a question we do not have yet have the answer to, and that's something that this government, with the corporate entities within Germany, need to answer in a more concrete way.
Yeah, well, perhaps you can put some of those questions to the gentlemen who are coming in an hour's time from Siemens and Deutsche Bank. So it'll be really good to watch that interview. But you mentioned they're going to meet with the Chancellor afterwards. How important is it that initiatives like this, that he's got buy-in from the investment community, that the economic pledges are being followed through? How important is it for Friedrich Merz that this actually succeeds?
Yeah, it is the foundation upon which he has basically run his campaign, and his chancellorship is going to be all about turning the economy around. His pitch is this is the CDU, this is a conservative, business-friendly government. This is one that really understands the needs of the German economy, and that is what he's trying to basically embody in his chancellorship. The question is here, he's pledged hundreds of billions of dollars on defense spending and also on infrastructure spending. What he does not want to have is you generate €1 trillion worth of debt-financed spending that basically becomes a sugar high within the economy. In order to prevent that from happening, you need to join it with private investment, and that is exactly what he's trying to do here. And failure to do so will really mean that these sort of other alternatives, namely the Alternative for Deutschland, which is this the far-right party here in Germany that has been saying that basically mainstream politics are broken, they're unable to fix the economy, they have no understanding of how to do that. He needs to prove that wrong in a moment when that sort of Alternative for Deutschland, the far-right in Germany, is doing the best that it has done since the Second World War, upwards at times of 25% of the vote. So that is really going to be the center of this chancellorship for Friedrich Merz, and in order to pull that off, he's going to need the private sector.
Bloomberg's Ollie Crock, thank you for that report. And Oliver will be speaking to the CEOs of Deutsche Bank and Siemens in a joint interview at 7:40 a.m. London time, so in about an hour's time, ahead of their meeting at the German Chancellery later today. Now, Deutsche Bank is just one of the firms reporting this week. Let's look ahead to the week in earnings with Bloomberg reporter Chloe Millay. So we broke Ryanair at the top of this show, but of course, later in the week, we're going to get a bunch of European banks reporting as well. Let's start maybe with Deutsche Bank. What are we expecting out of the German bank?
Yeah, so for Deutsche Bank, I think we really got a taste of what's to come when the CEO recently mentioned that there was really there had been a bumpy second quarter in the trading division, and really he adjusted the expectations down in that trading unit. He also mentioned that the advisory business had a weaker than expected performance. So based on that, we know that it might be a little bit weaker and that the earnings might disappoint a little bit based on that. Analysts are saying that the cycle of earnings upgrades from banks like Deutsche Bank might be coming to an end. Of course, we have recession fears, we have the trade war, we have interest rate cuts, and all of that is really feeding through into lower net interest income, but then also pushing up the cost of risk. Something that might be a bit of a bright spot is the corporate banks. So obviously companies are looking to restructure the supply chains. They are looking to invest in the defense industry, for example, in Germany. So that might be helpful there for Deutsche Bank. So we're looking at those things in particular.
Yeah. One thing that I noticed this morning is the huge outperformance actually for European banks year to date versus the U.S. counterparts. So Stock 600 banks is up 31%. KBW in the U.S. is only up 13%. Of course, we did have very strong U.S. bank results last week. How is that going to read across to some of the other European banks that are reporting this week, the likes of UniCredit, BNP Paribas, NatWest? Should we pick up similar themes?
Well, the key thing to kind of know about the second quarter earnings season for the banks is that this is coming off the heels of a really strong first quarter. First quarter was really resilient, and that really pushed the share performance up. But the key thing to know for this quarter is that things are catching up to banks. As I mentioned, the rate cuts are feeding through into lower earnings. We have seen that through Nordic banks that have reported a little bit earlier in this earnings season. And of course, tariffs and the uncertainties are feeding through into loan loss provisions and impacting deal making as well. So if we think about the read across from investment banks, big banks in the US, that might be positive for the banks in Europe that have those big investment divisions like Société Générale, like BNP Paribas that is reporting this week, like Barclays next week. So that might be a positive. For other banks, it might be a little bit less so. Another set of banks that might be doing quite well is UK banks. They have really strong kind of structural hedges, and that's alleviating the impact of rate cuts and kind of shielding their earnings. So we're expecting good earnings from Lloyds and NatWest that are coming through this week.
Bloomberg's Chloe Melly, thank you so much. Really good to have you on with that preview of European banks' earnings this week. Meanwhile, French grocery group Carrefour is said to be working with Rothschild on a potential sale of its Italian operations. Bloomberg understands Carrefour and its advisor have started gauging interest from potential suitors in Italy. Sources say the business is likely to be sold in several deals, given its size. And coming up, Elon Musk's feuds are having an impact on the billionaire's businesses. We'll look at that in today's Big Take next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Elon Musk started his stint in the second Trump administration as close to the top of the world as any billionaire can be. He appointed himself head of the so-called Department of Government Efficiency, DOGE, the cost-cutting effort which made him briefly one of the most powerful people in Washington. But Musk's grandstanding has also cost him dearly. The subject of our Big Take story today that's up on the terminal. Highly recommend you read it. But let's go to Hong Kong now and speak to Bloomberg's Danny Lee. Danny, it's interesting because maybe before his stint in politics, everyone sort of respected or looked to Elon Musk as a businessman. But now he's blurred the lines between his business dealings and his political leanings. How has that impacted his companies?
Well, yeah, he's very much the businessman's politician, having that front row seat to the White House and all the influence he had, the impact he had for some time. You know, the bets he had made in backing Donald Trump all those months ago, and that $300 million in a way was well spent, frankly. You know, and investors now will be, frankly, counting the cost of the impact of Elon Musk being so close to Donald Trump and the administration. And now we are going to see just how much of the Musk magic has been damaged by all of his activities in the White House, because now we see two of the world's most powerful people, Donald Trump and Elon Musk, falling out over different views around different parts of government policy. And so now we see very much this existential threat for something like Tesla, SpaceX, given they are so intertwined with or reliant on government subsidies to an extent. And so, this is very much a cautionary tale of what it means to be, very much in having that front row seat in the White House there.
Yeah, but also pretty outspoken as well. Look, there are going to be earnings this week coming through from Tesla. Interesting to watch, especially in light of the declining car sales. I remember it wasn't that long ago we were reporting in Europe that BYD has actually overtaken Tesla in terms of being the most prolific EV maker. So how is that sort of overshadowing the results that we could get this week?
Yeah, I mean, Tesla has been facing a drop in sales across many major markets it operates in, and even the most recent quarter, the quarter where we're going to see the earnings be produced on Thursday, the fact that sales had slipped almost by 14%. So that gives rise to, when you look at earnings, just the impact it's going to face. So we are going to see probably an impact. Revenue will come in around $23 billion. And adjusted earnings per share will come in around 44 cents. But these are all various estimates by analysts which have been continually cut the longer Musk has been in the White House. And when Bloomberg terminal users look at the MODL function, these estimates are at their lowest ebb, right? And so very much now we can see Tesla, perhaps for Elon Musk, these kind of results, they may be quite poor, but a clean slate now that Musk has left DOGE, left the US administration, and has taken great control of Tesla. So he's very much in control of Tesla's destiny and very much responsible for the sales. And so therefore, this will be one to watch where we can see Musk putting all of those words into actions to turn around Tesla.
Yeah, let's see. It seems like the bar is pretty low from what you say vis-a-vis those consensus analyst estimates for EPS. Bloomberg's Asia transport reporter Danny Lee, thank you so much. And a reminder that the big take is up on the terminal if you want to read it too. Now to some of the other stories making news. Alaska Air Group says it sought a temporary grounding of all planes for its main brand and Horizons Air unit after suffering an IT outage that is impacting flight operations. The fifth largest U.S. airline requested the grounding in a notice sent to the U.S. Federal Aviation Administration late on Sunday. The carrier warned there would be a, quote, residual impact on services throughout the evening. Hackers are reported to have exploited a major security flaw in widely used Microsoft Server software to launch a global attack on government agencies and businesses in the past few days. According to the Washington Post, the U.S. is amongst countries investigating the compromise of SharePoint servers, which provide a platform for sharing and managing documents. The Post quotes a source who says tens of thousands of such servers are at risk. UK home sellers slashed their asking prices at a record pace in July as a surge in available properties gives buyers more power. The nationwide trend, according to website Rightmove, saw the average price drop by 1.2%, with London and higher-end homes experiencing the steepest reductions. The price cuts are largely due to an oversupply of homes on the market. And Iranian media reports say agreements being reached for talks on its nuclear program with the UK, France, and Germany. A state-run agency says the talks planned for Friday will be at deputy foreign minister level. It says the discussions will be separate from indirect talks with the United States, which have stalled since Israel launched attacks on Iran in June. And plenty more coming up. This is Bloomberg.
Earnings season is here.
The focus is on the European earnings space.
A busy week of corporate earnings.
We're going to be deeply into a lot of these earnings stories. Bloomberg is first to break the numbers.
Santander, Caixa, Soc Gen,
Deutsche Bank, HSBC, BBVA.
A slew of bank earnings already out.
With the smartest insights.
There's an earnings revolution going on.
Markets are going to be driven more by earnings.
It looks like the worst is behind us.
Continuing coverage on Bloomberg. Context changes everything.
Private sector is not doing as well as everybody thinks it is. Like most of half of the employment growth we saw last month was in the public sector, and that means the private sector is not doing particularly well. So I was just joking that, if you're walking on a lake and the ice is frozen and it sounds safe, but when you start hearing cracks, and that's what I feel like, it's too late once you go through the ice.
That was Federal Reserve Governor Christopher Waller speaking to Bloomberg on Friday, of course, one of the more dovish members of the FOMC. All right, let's take a look at some of the key charts as we shape up for what's going to be quite another big week in terms of data. In Europe, we've got the ECB meeting on Thursday. Interesting to note that Eurozone aggregate CPI is basically at the target. It's at 2%. And even the regional variations are very minimal, as you can see from that chart. So the focus will likely be on what the ECB have to say about growth, especially recently citing downside risks to the growth outlook as we think about also as well that August 1st deadline on tariffs and how the EU may respond. So keep an eye out for that on Thursday. We also get European bank earnings coming through as well this week. European banks in general have had a very strong start to the year. I thought this one was interesting. A few weeks ago, Santander overtook UBS in terms of market cap, in terms of becoming the largest bank in continental Europe. This as we talk about perhaps UBS exposure to the U.S. and some of the steeper capital requirements that are coming through from Swiss authorities that have weighed on UBS stock. But interesting to note, though later this week we get results from Deutsche Bank, NatWest and UniCredit to watch out for. And then finally, we were talking about this in the big take, Tesla. Tesla earnings are on deck coming out later this week. Interesting to note here that blue line is basically a representation of what analysts are estimating that second quarter EPS figure to be. And you can see it's been slashed and slashed and slashed. So perhaps the bar for an upside surprise from Tesla is pretty low. But again, a lot of pressure on Elon Musk, whether he can turn this company around, people's perception, because it has been hit a lot by the things that he said politically and obviously his stint at the White House as well. So something to watch out for this week, in addition to all of the other big tech names that are reporting, including Apple, Amazon, and Meta. And Bloomberg Terminal users can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. And a reminder on a programming note, the CEOs of Deutsche Bank and Siemens will join us shortly for a joint interview ahead of their meeting at the German Chancellery later today. That conversation is at 7:40 a.m. London time. We were just speaking to Oliver Crook about it. You don't want to miss it, happening in about 40 minutes time. But for now, the opening trade is up next. This is Bloomberg.